And we're live. Welcome to a special early edition of the week that was, Robinhood's weekly market recap. It's Friday, October 3rd. That's right. Feels like the first. I'm your host, Bill Ruby, filling in for Obi still, joined as always by Robinhood's Chief Investment Officer, Steph Guild. Welcome, Steph.
Thanks. It's fun to be here in the morning. I still haven't had my coffee, so I'm sorry if I'm
Oh my gosh, I've had so much coffee. We are on opposite ends of the spectrum.
Well, my friend here who sits with me and helps me produce it went to get himself one, and I didn't get one. So
well, then you got to deal with the smells, and you
Shout
don't
out
get to drink it.
But I got my Friday shirt on. It's Friday, and there's stuff to talk about.
There sure is, and we're going to be looking at the markets as we come into them as well, which is pretty cool. Something we don't usually get to do. But don't forget to follow Steph on X and Instagram at Steph Guild NYC. The real one. We've got a great
one. Oh yeah, we just got rid of a few of the fake ones.
They're constantly popping up, so be wary. But we've got a great show for you today. We're recapping what you need to know from this past week, including the impact of the government shutdown, breaking down jobs data, and Tesla's delivery surprise. Then we'll wrap up things by looking ahead to next week's Delta earnings. Don't forget to subscribe to the channel to submit your questions in the YouTube chat. We'll also answer them in the show later. But first, as you guys know, we've got to get to some ground rules before we get started. Today's content is provided for informational and educational purposes only. It does not constitute tax or investment advice. It is not a recommendation for any security or strategy. All investments involve risk, including the possible loss of capital. Please consider your investment objectives and your risk carefully before investing. Past performance does not guarantee future results. Lastly, the live stream is not an official customer support channel. If you have questions about your account, please reach out to our support teams from within the app. Okay, Steph, with that, there's just under 30 minutes to the opening bell. It's time to look back at the week that was so far. Are you ready?
Yes, let's do it.
Okay. Starting with the major indices, we're looking a little up at the moment. So up 71 in the S&P, up 388 in the NASDAQ, Russell up 24, and VIX popping a little higher. This is kind of what we saw out of last week. And then by the end of the day, we had dipped below 16. We'll have to see if that happens once again. So up about 1% so far.
Yeah, it looks like markets are kind of flat right now. And you see, look at healthcare. I mean, that was kind of like the big winner this week, right? With some of the shifts from the government and some of the, I think, clarity starting to come on like what will happen with pharma companies here in the U.S.
Right. They had the most favored nation deal. Pfizer was a big winner on that. Yep. Eli Lilly popped a little as well. Information technology also up 2.65%. I think also a little surprising is energy down 3.87% after kind of a big week last week. They're taking a little bit of a dip so far.
There may be some more production, I think, coming, but you're actually seeing some of those names move this morning in a positive direction.
Yeah, we'll take a look at how we close the week. But going to our top weight, NVIDIA is the big winner, up 6% so far this week. And Microsoft and Apple pretty much unchanged. On the downside, JP Morgan Chase and Meta is seeing a little bit of a slump going into our Friday.
Yeah, and I think you're thinking about Mag 7, just not the Mag 7 anymore. You just got to look at each company on its own, and that's actually what's showing here. Yeah,
and there's been more talk of this Batman acronym. Have you heard this?
Oh, I don't think I'm not up on that.
Well, this is essentially the new Mag 7 with a couple added names. So
like Broadcom, Apple.
Yeah, Broadcom, Apple, Tesla. I'd have to go back and look, but yeah, this is
Microsoft and what's N? NVIDIA.
Yeah, NVIDIA.
Okay, so it's cutting out. I don't know. What is it cutting out? Google?
Yeah, Google's not in there.
Okay.
And
Alphabet is Google, right?
Oh,
maybe it's cutting out Apple. I don't know. We'll have to Google it.
We will have to Google to see if Google's in Batman.
Yeah.
But going over to our leaders and laggards for this week, Western Digital, big winner, up 22%. Biotech, and Coinbase up 19%. Charles River. On the downside, we have the credit rating agency. It seems like FICO is mixing it up a little bit on that side, with Equifax down 8%. And as we see, Devon Energy down 7.2. We were just talking about that.
I know, but the Equifax thing, like that was also a big thing yesterday, right? Like FICO was up a ton.
Right.
And I'm kind of surprised it's actually not in the leaders laggards here, maybe just from movements earlier in the week, but Equifax is kind of a loser in that, in that game between them.
Yeah, I mean, I think they would be on the board. It's just we've had some monster winners this week. Real big up for a few of these names. And going over to leaders and laggards, kind of the reverse of last week again. The 5 years at 3.68, that's down 9 basis points. The 10-year at 409, and the 30-year at 468. So giving back a little bit of the gains that we saw last week in the bonds.
Yeah, I mean, I think it's just one of those, like, it's been dribbling down a little bit in the bond market. And we'll talk about this in a second, just talking about like the little bit of job data that we got this week. But I'm like starting, just some of the data we saw this week, and I put it together. I'm starting to really think we could have much lower rates than the market is even pricing in right now when I was looking at futures last night.
Well, I think we'll talk about this more, but there's certainly some uncertainty in that space. We'll get to that, but that's one thing we didn't talk about here was tech globally is up, not just here in the US. Have you seen my China tech bet at all recently? Doing well.
Nice boost in healthcare. Kind of getting out of the shadow of the tariffs, and I don't know. Maybe this is the beginning of some rally. Hopefully it's not just like a one-time thing. Lots of M&A too, right? Like if you think about, like, I know maybe we talked about this last week, I can't remember, but the EA deal, and lots of other, like Merger Monday is back, right?
Yeah, I think this administration has been pretty, let's say, favorable to that sort of movement. And I also heard an interesting stat. There's actually more private equity firms in America right now than there are McDonald's. So I think we could also see some, there's about 19,000 private equity firms and 14,000 McDonald's.
Look at what one of the laggards was, KKR.
Yeah, I mean, I think that could be prime for some more M&A as well.
We'll see. Let's look at the weekly chart.
Yeah, look at it
from a technical perspective.
Well, let's take a look at the S&P. We've got the ES up right now.
Oh, okay.
We're not quite open yet. We've got about 10 minutes until, 20 minutes. Yes, 20 minutes till the open. And right now we're sitting pretty steady. We are sitting right against all-time highs. We actually made 2 all-time highs this week, and we'll have to see if that continues into the Friday. But right now, pretty steady, not much movement in the pre-market yet. But something I did want to take a look at, because it's been a pretty volatile couple of weeks, is the crypto market. Bitcoin has rallied all the way back off its kind of ugly last week, going all the way down to about the 109,000 area, and rallied all the way back up to 120. Maybe willing to test this 124,000.
It's funny, kind of like hit that 150-day moving average and then bounce right back up, right?
Yeah, I think I've noticed that, I think, you guys in the chat could let me know if you see something different, but I have noticed that Bitcoin does follow a lot of pretty beautiful technical patterns, and this is a perfect example of it. Tested that 150-day moving average, and now we're seeing it rally back up towards its old highs, but still staying in this range, which Bitcoin, if you go back here, go down to this area, it can stay very range bound for a while. So we'll have to see if it can break out above that 124,000.
Base and breakout.
That's the name of the game when it comes to Bitcoin, at least. Well,
yeah.
Sorry, Steph. So the big story this week is the government shutdown after Congress failed to come to an agreement on funding. This means agencies that aren't essential have completely shut down, while essential programs like Medicare and Social Security keep running. What does this shutdown mean for the market, Steph?
I posted actually on X exactly what I think about it, but
Mm-hmm.
I wrote about it this week in Investors Guild. But
Right.
markets shrug off shutdowns. They've certainly done that this week, making new highs. And they really depend. What happens with the markets really depends more on the general economy and perceived earnings growth. The last shutdown during Trump's first term was the longest ever. That started in December of 2018. It lasted 35 days. Now, I can tell you that was a pretty crappy time. I was working on the desk. I happened to be the one senior person that had volunteered to stay on the desk during the holidays. But the markets weren't down really because of the shutdown. I don't think it helped, right? Because it was dragging on. But there were a lot of other things driving that. In particular, the market was getting worried about the economy, and the Fed had raised rates in the face of it. And they were like, absolutely not. And then after that, Powell kind of changed his tune and the markets rallied back in January. Um, that time, 25% of the spending affected was only affected because most of the appropriation bills had already passed. But this time, Congress hasn't passed any annual spending bills. So all of the agencies are affected. I saw like yesterday, 90% of the SEC is furloughed right now. So that means
90%. Wild.
not a lot of rules, not a lot of decisions being made, can't get like approvals on things. So that may slow down the financial services, in general, if there's kind of people are trying to launch new things. Um, and then this shutdown is that, Trump is threatening to fire non-essential government workers, like just using it as a way to cut budget. When it comes to the market, you can see actually we have a chart that following shutdowns, and this is going back to 1976. We had 21 of them since 1976. Markets have mostly been up following 6 to 12 months after. You can see usually during a shutdown, it's like very little movement because shutdowns have been pretty small. Like on average, they've been like 1 to 2 days
Mm-hmm.
besides that 35-dayer. The only time that they didn't do well was in the 70s. And then usually 6 to 12 months after that, they tend to rally. And mostly because over time, markets have historically gone up. This doesn't always happen in every moment.
Mm-hmm.
Usually the bonds, and we don't have a chart for this, but bonds and the dollar tend to dip a little bit, but then stabilize after the government reopens. So it's kind of a nothing burger for now. But look, I think the one thing is like we don't get important data, right? Non-farm payroll is not going to come out today,
Mm-hmm.
or didn't come out this morning, I should say, because it would have been 8:30 Eastern. And that's like kind of an impact on Fed decisions because they may not get the whole kind of picture, whether you believe it or not. So people are going to rely on little bits of data like ADP this week, which wasn't very strong, Challenger, which is all the layoffs, which also was a little bit of a weaker sign. But it kind of also depends on the region you're in and sector that you're in. And all because of this, government rate expectations have shifted. So they were 40 basis points of cuts averaging in this year, and now they're at 47 as I was looking this morning. So, they're creeping higher, and I'm actually getting more dovish, just thinking about more because of housing prices and the trajectory there.
Yeah, and that kind of leads us right into our next point. While we didn't get the monthly non-farm payrolls this morning, we did get some jobs data this week. Take us through that and how it might impact the Fed. You touched on it a little bit.
Yeah, we got JOLTS data, right? So it's just like
Mm-hmm.
job openings and labor turnover survey. So that's like the quits rate too. Job openings actually beat expectations. So 7.22 million jobs ahead of the 7.19 million estimated. And it's a slight tick up from the last month. It's kind of funny that like there's so many jobs outstanding, but hiring was very little changed. And separations were very little changed. So the quits rate really didn't move. Then on Wednesday, we got the shutdown in effect, but we did get the private sector employment report from ADP. And that was actually a lot weaker than expected. 32,000 jobs were cut, there were 32,000 less jobs. And most of it came from small and mid-sized companies. And the large companies actually gained jobs. So that was like starting to make me worried that maybe this is where the tariff impact is, right? Like if you're a larger company, you have the ability to negotiate, push back on your pricing. If you're a smaller company and you have to get supply and things are costing more, we know also one thing Powell raised is that like it's not actually making it to the end consumer, right? It's why inflation hasn't spiked up. It's that kind of in between that is holding the line for inflation. And maybe they're doing it, but also cutting workers. So that was a little bit, and there was an expectation that you'd actually see an increase in jobs. So that was a little worrisome. Geographically, there are actually job gains in Northeast, out West. All the losses came from the Midwest. And then within the leisure and hospitality sector for the most part.
Well,
We got some housing data.
yeah, we did. We did.
So you put those things together, right? Like you think about the jobs data, the bit that we got, you get this housing data that showed prices are falling in some areas of the country, mostly in the South. And housing prices are 30% of the CPI, housing and rent. That's the shelter component. And look, if that is dropping, that's a good sign in terms of inflation and the ability for, and also maybe affordability, for God's sakes. But the affordability is going to hopefully improve. Inflation maybe starts to come down, and then it gives the Fed more leeway. So when I was kind of thinking about it, like looking forward, I wouldn't be surprised if this trend continues to see a 3% Fed funds rate, which is a lot lower than even the market is expecting right now. So that could go beyond the kind of risk management cuts that the Fed is talking about.
Yeah, and I mean, if they did do a 50 basis points cut later in the year, I mean, maybe it's catching up if the government shutdown stays down. Do you think that could also have like a counterintuitive effect on the market, kind of being like, oh, maybe the Fed is seeing something we're not, or do you think like steady Eddie is the way to go and 50 basis points wouldn't really care?
That's a good point. It does like, I'm saying this because of inflation and because of, housing prices, inflation, the labor market being weak, but not too weak. Like that's the ideal scenario. But if it does start happening and the Fed rhetoric is, look, things are getting worse, that could have a counter effect. You're right. So it really, I think, will hinge on the why and how people, how they're talking, how the officials are talking.
Yeah, well, seems like a lot. I mean, this is nothing new, but a lot riding on what and how JD Powell says it, and I think he's actually speaking next week too. So
Yeah, he is, and some of the other governors too, right? Like, because
right.
JD Powell's I should say DJ Powell is what I like to call him. He's his term ends in May, so you do have to start looking at and it'd be interesting. I do want to who the next one's going to be will be important.
Very much so. Very much so. Well, we'll wait until next year for that. But shifting gears to some specific stocks, one of the big stories this week was Tesla deliveries. That happened, I think, on Wednesday afternoon. A bit of a surprising beat for them. Take us through that, Steph.
They delivered 400. So, okay, remember what was expiring recently?
The EV tax credit.
Yeah. So there's definitely a rush for EVs, and they delivered 497,000, close to 497.1 thousand vehicles globally in the third quarter. And that's a 7.5% jump from last year. The catalyst really was people rushing to take advantage of the $7,500 EV tax credit. It just expired on September 30th. So we had an expiration of the government and the EV tax credit around the same time. Production lagged a bit in the quarter. They produced about 447,000 vehicles. So the company delivered more cars than they built, which has drawn down inventory, which could be a hindrance for them in the future. I mean, which tells you like, look, the biggest question is how sustainable is this growth? Like the tax credit is gone. Did it pull future demand forward? I think it did in the short term. So analysts are cautious and warning people of softness ahead. And look, people are always cautious about Tesla. There's always like this faction of people that just don't like the company. There's a huge other faction that like the company.
Right.
my perspective, Tesla's a lifestyle choice when it comes to your portfolio. Like, it's not necessarily a technical one. It's not necessarily a fundamental one. Like, do you believe in it or not? And that's really, I think, the choice you have to make. Do you believe in Elon? Do you believe in, what the company can do in terms of beyond making cars?
Yeah, and belief is you're going to need to hold on to that because this is a super volatile stock. I mean, they've done, I think they've expanded their like business avenues quite a bit. They're in solar, they're in batteries quite a bit, and they've done a lot to diversify their income, but it still is just a super volatile stock, and a lot of it trading on sentiment.
Look at the chart to see that. Yeah.
Yeah, if we take a if we take a look, I mean, it is a massive U here. This was kind of a buy the rumor, sell the news going into, I think, just after the election time, pretty much. We saw right after New Year's, it dropped almost 50%. And, if we go back even further, you could take a look. I mean, that's after about 100% increase, then down 50%. And we are almost at that 100% increase again. So, calling this stock a roller coaster might be an understatement. Right now, we are coming up on that old 488 high. Kind of a rough day for it yesterday. Got slapped all the way back down to 436. Does seem like it's continuing to hold this trend. And, these Fibonacci levels have been a little helpful. It did tap on there and run.
There was a golden cross recently in August.
Oh, yeah, looks like right here there was in July 22, a little bit of a golden cross, and
which was after a lot of other golden crosses, I'll tell you. Like early July was a big golden cross move.
Yeah, this looks like a sinusoidal wave here. If we take a look.
Wait, what? A sinusoid? I've never heard that term.
Like a sine wave. I'm using the full name. Sorry, I think I remember too much from calculus.
I like it. No, I like it.
All right. Well, one of the other stocks on our radar this week was Nike. They released earnings. A bit of surprise on sales growth as they beat on both the top and bottom lines. What did you see in this in the report, Steph?
Yeah, this is one of those names that have been through it, but I do think like they're focused on turning themselves around. They had positive results. They're showing signs of stabilization in their turnaround efforts. Revenue is $11.7 billion, which was up 1% year over year. EPS was 49 cents, was well above estimates of 27 cents. And most of that came from their wholesale business showing improvement. Their running category posted a strong gain of over 20%. That is a big shift.
Running's back.
Running's back. Oh, I just can't get into it.
Not for me, not for my knees.
My hips and my knees don't lie. But the strong report did come with caution. Look, their gross margins were compressed by about 320 basis points because they had to discount, and costs are rising. And I think the bigger news was just like the tariff outlook. They had to increase their the hit of the tariffs to $1.5 billion annually, which is an increase. They originally estimated $1 billion. Their DTC or direct to consumer sales were soft. China sales underperformed again. So not like, a sweepingly good news, but I don't know if you're going to have that after the utter crap that they've gone through the last couple of years. So we'll see. I'm personally not a hater, but it's definitely a show me stock.
Yeah, they've been through a lot. I think they're seeing more competition from brands like Hoka. So, it seems like they're being savvy, but the deck is kind of stacked against them.
There's a lot, them on, right? On holding.
Yep.
On shoes. I like those. Those are comfy.
So not a buyer of Nike? No, we'll see. But this is an interesting chart. I think it had a pretty interesting technical setup. We got this almost double bottom that it had coming out of this July 1st big news. And right now it's sitting right in the middle of this range. If you notice, it's right on the 50-day moving average. Right. If you take a look, it tested that 150-day moving average, and that was kind of a key critical area because the gap that we saw back in June And a lot of times these stocks have a tendency to fill that gap.
Yeah.
It does look like it was saved by some positive earnings news, but still right in the middle of that range. Looks like for the implied open, we're seeing about 74.84, which is just a hair higher. So I don't even know if we can interpret too much in that. Looks like it's going to open right in the middle of that range. So we'll have to see where this stock goes over the next couple weeks. By the way, IJ, I did notice I do look different than Obi. So
I know, because we didn't change the opening.
He said Obi looks
right?
different today.
Yeah.
Yeah,
It's Bill. That's because it's Bill.
That's right. And did I see Obi in the chat? Oh, Obi is in the chat. Welcome.
Oh, what
Welcome.
up, dog? I know I owe you a message back, Obi. I'm sorry. He sent me a message 2 days ago, and I have been beyond busy, so I will get back to you. I'm sorry.
Yeah, well, welcome everybody. So, we will take your questions. And before that, here's some of the top market headlines from the week. We're back in 30 seconds. We'll see you in a second, guys. Okay.
Now, before we get into Q&A, I just want to take a quick look at the markets before we open. I was looking at the S&P 500. We've got 304 gainers, 74 losers. Some of the losers are in the kind of...
Let's look at the ES still. We got 3 minutes till the open.
Yeah, let's take a look at it.
Still up a little bit.
Yeah, it's still just up a little bit.
I mean, that's been kind of the story of the market so far, with a few distinct interruptions. It's kind of been a melt upwards. I put this line on here the other day, and I think it can be pretty helpful. We are sitting on a beautiful uptrend right now. We're at the top end of that. It's not inconceivable that we would come down to test that. As of right now, we're not seeing that in the market. We're seeing a continuation of the melt upward, but that's a big line to watch. I've been watching it. If it does come back to test, or even more so, it goes through it. That could mean maybe a little interruption of the uptrend at the very least.
We are going in a catalyst vacuum, but I feel like I've been saying that for weeks, so we can probably ignore me.
Well, I think the call and the timing are, one of those can be off a little bit, but it doesn't mean there's. I think that's an interesting call. I think there could be something to that for sure.
Yeah, no, because we really don't have much. Well, we'll go over it. Let's get to questions.
Okay, moving over to questions. Let's take a look here. So Philippe asks, is there a reason we can't trade option spreads in retirement accounts? So I think that's something that other firms do, and there's been a lot of discussions of that here at Robinhood. So retirement accounts, if you're trading spreads or any spread in any account, it needs to be in a margin account. And margin in a retirement account is different than margin in a regular account. You can't use leverage in any retirement account. The margin in this sense...
Not a Robinhood rule. That's like a IRA retirement rule.
Exactly. You cannot use, and you can't short in a retirement account. You cannot use any leverage in a retirement. Those are just regulatory rules. So margin in the sense of a retirement account is really talking about setting money aside, which you would need if you have, say, collateral on a spread. If I do a $2 wide spread, I need $200 in a collateral in case that spread goes against me. So that is something that has been talked a lot about here. We'll see if our product team is looking to explore that further. But It can be a useful tool. There are other ways around it. It is a little bit of a riskier strategy because it's kind of boom or bust in a lot of different option strategies, but it can be a useful tool, much like all options. So, I think that could be something that's coming. We'll have to wait and see what our product teams are pushing out there. Okay, going over to question 2. Michael Obucina asks, I think we've seen this fellow before. Steph, sounds like we won't get much BLS data during the shutdown. How reliable is ADP?
It has not been, the correlation, let's say, is not 1-to-1 with the BLS data, but the BLS data reliability has been waning over the last few years, mostly because there hadn't been much effort or money put towards improving technology for the BLS. So you could maybe argue that ADP could be maybe starting to be even more reliable, but it typically has not been, it has not aligned most often with BLS, and just depends on like how reliable then BLS is, and perhaps ADP is the true story. That's what I'm starting to feel like.
And, just to break that down, because this was a term that was pretty unfamiliar to me at least a couple years ago. ADP is essentially like a payroll company, right? So they're seeing how much,
Back in the day when you got paychecks instead of it just dropping into your account, it was oftentimes it was an ADP check. They were sort of somewhat of a monopoly on it. And so they do get that kind of like employment data. Whereas the Bureau of Labor Statistics calls companies essentially and does a survey, and they start with a phone call, which I don't answer the phone. I don't know if you do, but it's very rare if I answer the phone.
Yeah.
And when family member calls me, my heart starts beating harder because I get nervous of like, why are you calling me? What's wrong?
Well, it depends on which family member is calling, but yeah, I think so too.
Yeah, I know. But in general, like phone call. So my point is that like, that's what's made me feel like the BLS data is wrong. And as you know, we had that revision not long ago that was pretty dramatic. It's probably one of the most dramatic revisions, although they usually happen. But hopefully that's helpful. But ADP, I'd say is as reliable as BLS, directionally reliable.
Mixed reception there. And before our third question, I just want to pop over real quick to the ES and see how our open.
Yep.
Right now, pushing a little bit higher. We're at 67.77. Yeah, I like to check the futures. I go back and forth a little bit. I think Obi is very partial to futures, which is fair, I think.
Yeah.
But SPX is up just over 13 right now to 67.28. So strong open. Nothing crazy as of yet, but. Did we just make a new high, or is that the one from yesterday, 67.31? Let's take it down to a minute to see. 67.32, and on the 1 year we're at 67.31. We did just make a new high on the S&P.
Drop back down, right?
Yeah, looks like we're seeing a little bit of relief at that. We're at 67.29, but still staying in the range. We'll see if that can continue throughout the rest of the day. Yeah. But going over to the third question. Quantum Queso Dips asks, can you give a broad overview of MACD?
This is good for you.
Well, I honestly have never used MACD. I use a lot of different oscillators. So this is an oscillator. It kind of tells you if the market is, this one in particular, goes on momentum. So if you're seeing a lot of momentum, like we did, like for instance, out of this April, this was, we'll call it the tariff tantrum, whatever you want to call it.
Yeah, well, that was the pause that drove the markets up. So we'll call it the tariff pause.
Yeah, the tariff pause. And then we rallied really hard, and you'll see a bunch of green candles. This can kind of help you figure out trends that are about to happen. It's, as with most oscillators, a lot of people interpret this as, if it's really red, then I want to buy. If it's really green, I want to sell. kind of this is almost a contrarian item where how much further can this go? And that's where a lot of studies kind of turn from a science into an art. It's how you interpret them and how often you've had success feeling like, okay, it was red here, but if you had bought there, then you would have been in a whole lot of trouble coming into the next couple weeks. Like right on this February 27th, we had 2 more weeks of downward movement. So I think that's kind of the art of the science. When it comes to any study, I think a good like rule of thumb is, can I interpret it successfully? Have I had success with this? And then you continue to move it, like use it on a regular basis. If you can do one trick over and over and over when it comes to trading, you will be a successful trader. If you can just make, if you're going to make $10 on something every day, you'll be one of the greatest traders of all time.
I like to use MACD. Like I'm thinking about it. I'm like, it's a measure of momentum, right? Like, and so I go back to something that Quantum Queso, actually, if you watch the what's his name? My gosh, why can't I think of his name? The technical analyst we brought in from 22V last year, and who was also at Hood Summit this year. He focuses on 2 things, a base and a breakout. And he says, if you can look at, like, you find one indicator, let's say moving average, or, looking for this trend of a base and a breakout, and then you pair it with one other thing, like, is momentum, in your favor or not? That's where I like to use MACD, like as a secondary thing. Like, is it in my favor or not? If it is, then, that's actually like the wind is at your back, as he likes to say. It doesn't definitely mean that it's it's all systems go, but having 2 indicators, one that backs up your first main indicator, I think is helpful.
Yeah.
John Roque. Yes.
John
that's
Roque. Excuse me. John Roque.
Thanks.
Yes. And yeah, I think having a consensus of indicators is always a plus, and that kind of leads us into our next one. Edsman asks, "What are my favorite indicators?" To be honest, lately I've just been using technical analysis, but one that I used almost religiously when I was trading, shall we call it semi-pro? I was a broker and a futures trader. Was Bollinger Bands? This is actually a Bollinger Bands. But Bollinger Bands will show you the 2 standard deviation range on anything, and it usually is centered by a 20-day moving average in the middle. You can see this almost looks like a cloud, but it's really more just showing two standard deviations on either side. And it kind of tells you when something may be breaking out or pressing to a new zone. I think it can be good for swing trading or position trading, because once you have a breakout, now this isn't actually a great example of Bollinger Bands.
I'm sorry, when you say 2 standard deviations, I know 1 standard deviation is like basically like 67% of the time it's in that range, right? So 2 standard deviations is just a bit more than that, right?
Actually,
like 80% of the time or something like that.
So I guess I should say, I think it's 1 standard deviation on each side, and then so that would encapsulate 68%.
Oh, okay. 68%. So it's 1 standard deviation on each side. Okay.
Yes, exactly. So it encapsulates like something that should happen most of the time.
2/3 of the time.
Yes, exactly. And then when you see a breakout, it can mean something else. Like if we were to take a look at Nike, for instance, I haven't lined this up with Bollinger Bands, but once it tapped, it's almost a reversion to the mean, where we've tapped it, we're coming back, and then we've tapped it, we're coming back. This it flowed through, tapped, and came back. So this might be something to watch for if you're trying to, if you're trying to buy the high and sell the low. I used to trade from a short volatility standpoint, so this would actually be a hedging indicator for me. If it broke out of it, it may be something that I wanted to watch, but it could be a useful tool. But I think, any sort of indicator is really it's like a very personal thing. It's like what you're good at interpreting and using on a regular basis. So I think take it with a grain of salt, give it a try. And I think, to Steph's point, having like a consensus of indicators where, okay, I'm pretty familiar with this one, pretty familiar with this one. If they're both giving me the same signal, maybe that's where I should be entering or getting out of a position. All right. Well, thank you for your questions. Now it's time to look ahead to next week and what to watch for next week as well. Starting with the economic data calendar. So this is going to come with the disclaimer that some of the scheduled economic data could be delayed by the government shutdown. So keep that in mind. On Tuesday, we're supposed to get import and export trade balance, plus FOMC member Bostic speaks. On Wednesday, it's MBA mortgage applications, 10-year note auction, and the FOMC meeting minutes. And Thursday, Fed Chair Powell speaks. That's going to be a big one, as well as Michelle Bowman. There's also jobless claims and a 30-year bond auction. And then on Friday, it's consumer sentiment. And if shutdown is over, maybe non-farm payrolls. So Steph, like with all this, what's on your data radar for next week?
It is, like I said, it's a little bit of a catalyst vacuum this week. I don't know how market moving it'll be, except for maybe Powell. So I'll read the FOMC minutes. Just, you get a little more detail around what they were saying. We'll hear from Powell this week. I think the bigger thing, as I said, is the lack of news. And I've been saying this for weeks, so maybe don't listen to me, but we really are in a dead zone until we get to earnings, which start on the 14th with the banks, which is next Friday, right? No, 2 Fridays. But that's where there'll be minimal data to hang your hat on. And so besides maybe things that happen in the government, right? Which it can move markets. Like the government is mixing it up with the capital markets. And so I think that's why I said this actually on CNBC yesterday, but I was like, I think you do have to be aligned with this administration's focus. And that's like, when it comes to your portfolio.
Yeah. And, 2 of the last 3 shutdowns that we've had, we have been positive out of it. I think your graphic showed that. And it's also, this one's a little different, though. We've got the possibility of not just furloughs this time. So the earnings will certainly be important. So on that note, why don't we move over to next week's earning calendar? It's going to be a light week because keep in mind we're waiting for the big names coming, but there are a few companies to look at. On Monday, we get Constellation Brands. Think Corona, not Constellation Energy, that made a deal with Meta earlier this year.
They've also been in the doldrums. That company needs a shakeup.
Yeah, pretty steady downward move. Another, Michelob Ultra just got named the most popular beer this year. That's an Anheuser-Busch brand. So, they've got a lot of competition in that space as well. And Tuesday, it's McCormick. On Wednesday, we'll get Costco sales results. Not earnings report. We did look at Costco. We saw their earnings report. They've slumped a little bit, but it's certainly something to watch. And there's a lot of consumer spending and economic implications on that, I think. Then on Thursday, we get Delta Airlines, PepsiCo, and Levi Strauss. What earnings are you watching next week?
Definitely gonna be paying attention to Costco sales results for September. As you said, they reported earnings last week and had higher sales and EPS. But the stock is so not cheap. Like it trades at 45 times next 12-month earnings. And
Wow.
I just start to, even if you look at like the PEG ratio, which normalizes it by the growth rate, I wonder about the upside. Like maybe it's not a stock you own for that. Maybe it's a stock that you own for like the consistency and like maybe it's one of those stocks that doesn't drop by a lot because it is so consistent. They have such a loyal investor base and customer base. But I'm like, is there a ton of upside? I don't know. I'm not, I'm not saying you should do something about it, but it's something to watch. And then Delta Airlines is interesting. The market's expecting 6 cents increase from last year at $1.56 in terms of earnings. The guidance has been pretty wide. They had a guidance between 125 and 175. So that leaves some room for either downside or upside. The big questions are, can Delta keep their fuel costs under control, which obviously we've seen like energy and oil prices come down. So maybe yes. Are travelers still booking at strong rates? And is Delta holding the line on how many seats they fill? I will tell you, and how many seats they fly. I will tell you that this summer when I was traveling for work, it wasn't hard, it wasn't expensive. And then I flipped to this fall and way more expensive,
Yeah.
less seats. Like, yeah, that's my, 1 cent anecdotal assessment.
Well, I mean, honestly, that might be hard to interpret too. It's like, is it due to higher demand or is it due to them trying to,
Shrinkage.
you think it's shrinkage?
I
Oh,
feel like it is. I feel
uh-huh.
like the planes are a little smaller, the ones I've been taking, but I'm again a survey of one.
Yeah, anecdotally, I think I haven't traveled much this year. I think a lot of my friends have not either. Now that I'm thinking about it, so I don't know. We'll definitely be able to read more of the tea leaves once we see the earnings, and if we take a look at the chart, sitting right near the 50-day moving average, it did test that 150 back in the early August area. Still sitting on the 50 right now. If we take a look at the options market for this, right now, next week we do see. Right now it's 83% in the front, but we're actually going to be watching next week because that's when the earnings are out. We see vol actually come in a little bit to 74.12. That's a implied move of $5.72. So if we go back to the chart, $5.72 would put us essentially just above, just below, excuse me. Oh, no, just above this 150-day moving average, or right near the top of the range. So I think that's where you find your implied support and resistance lines on this, and maybe that means that you may test one of those coming out of it. That's at least what the options market is predicting. Now, Steph, football has been back, both pro and college. That means a lot of snacking. What about Pepsi earnings? What are we thinking here?
So expectations for EPS are $2.26, which is slightly down from last year. They have to deal with higher costs and things like tariffs, and ingredients. Pepsi is like, it's not just like the drinks, right? Like if you think about the
Right.
cost of aluminum, like all the things that make like the things that hold the drinks, have gone up. U.S. demand has softened. They are seeing a little more strength overseas, at least based on the last earnings call.
Mm-hmm.
And they've been doing cost cutting to protect margins, which is, one of the things that we've been, for at least for consumer brands I've been worried about when it comes to the effect of tariffs on the economy. And so we'll see. We know, Coke was under pressure to, make a fancier version of Coke with actual real sugar. So I wonder if they're going to be talking about any of that this quarter.
Yeah, and have you heard about this like dirty soda? Is this just like is that like
Dirty
so?
soda.
Yeah, it's like soda water, like flavored soda water. I think it's like a buzzword now.
Oh, you mean like a spindrift type of thing?
Yeah, yeah. I think
Oh,
like a lot of people are focusing on that. And I mean,
better for
actually, I
you.
think Pepsi's the majority of their revenue now comes from like Frito-Lay. So it's like a snack company
Yeah.
for the most part.
Yeah, that's
So,
true. Also
so
not good for you. Lots of sodium. Just gonna say it.
That's right. That's right. Well, if we take a look at the chart, this actually just had a golden cross too off the 150-day moving average, sitting in the middle, another middle ranger right now, waiting on news. If we take a look at the options market on this one, implied move of about $8.10 for next week. And that one doesn't even put you towards the highs on the top side. It does get you in a little bit of a hot water crossing under that 150-day moving average. So maybe the downside is the one to watch on this.
That's only like 50 basis points or something, right? Yeah.
Yeah, exactly. It's
Very
not
small.
it doesn't look like there's a ton of volatility priced in just yet.
Yeah.
All right, gang. Well, we are in the home stretch. Don't forget to follow Steph at Steph Guild NYC on Instagram and X. All right, Steph, we're just about out of time, but before we get started on our weekend, what did you learn this week?
So I was reminded, I was when you're rushed, sometimes you can lock in a bit tighter. I got to CNBC yesterday before my hit with only 10 minutes to spare.
Oh,
And
wow.
I rushed in. They were like, the security guards are like, just go right in. Like, we'll deal with you later. And it was the most efficient I feel like I had been, because I just didn't have time to think. And so it just, got on there. The ladies put some powder on me and I got on there. But more humbling is remembering, and I talked about this before we went on air, that I have to figure out in advance. So part of my homework going forward is going to be making sure I know what my kids' homework is, because
Mm,
I remembered that they are not going to they're not going to proactively call out what they have to do. So,
yeah.
no, and that ain't going to happen.
Well, you might
They're
have to
going to
brush
take
up
over.
on some math and English
Oh
terminology as
yeah.
well.
Oh
To
yeah, I had to look at the work on the math and, help her build a very long equation that then got down to each step and how you do it.
well,
PEMDAS,
I'm
remember
sure you're pretty
PEMDAS?
good at math, but I might have to brush up on a few things.
Remember PEMDAS.
Yes.
Um,
Order of
what did
operations.
you learn this week, Bill?
I learned this. So this is an interesting fact, and I think it's like kind of a good philosophy to adopt. I learned that John D. Rockefeller, one of the most wealthy men of all time, bought into what would become Standard Oil for $4,000 with the business partner. So it's like $2,000, which, back then, I think this is like
A lot of money back
1860
then.
something. It would have been like $70,000 or $80,000, which is nothing to
So
sneeze at. But it kind of speaks to compounding. He was like, much like Warren Buffett, big fan of compounding. I think in this biography I was listening to about him, he was, more of a compounding in a lot of areas like skills and relationships and that kind of thing too. But it can really speak to, things happen incrementally and then all at once. So I think it's a good philosophy to adopt, like just in your life and also just, in investing in general. Good things take time. Let the things work. And, I'm going to quote my mentors one more time. It's like, when you have the right position, just sit down and shut up and let it happen. So,
I think about that for our strategies portfolios. I tell you, like, we don't build it to be like, boom, you're up 20% in a day. It is
right.
meant to be this, like, all of a sudden you look back and you're like, oh, okay.
Yeah, and I mean, I think it's human nature to go in there and like, oh, I've got this good thing. I want to go in there and tinker with it. Like, just let it do its thing. Just let it do its thing. That's not always the case, but
Right.
a lot of the time it is. So
Yeah.
I thought that was a fun little fact.
Nice. I like it.
All right, well, that's it. Thank you for joining us, everybody. Thank you for joining us in the morning.
Yeah.
We've got a morning show. Thank you, Steph. Thank you to all the people behind the scenes. Thank you so much, Chad, for showing up. It's been everybody. I know it's a little bit earlier, but we really appreciate you showing up. And I hope you guys enjoyed the morning edition. Remember, we're live every Friday. For Steph Guild, I'm Bill Ruby. That was the week that was. See you next week, gang.